Analysis. Global investment banking faces more difficult times after Blockbuster year. A dearth of IPOs, a plunge in stock expenses and slowing worldwide financial growth are clouding the outlook for revenue at global funding banks after pandemic spending by means of governments and critical banks fueled a blockbuster 2021. Russia's invasion of Ukraine and tremendous economic tightening have brought about risky trading in monetary markets this 12 months. While that may help trading volumes, it however slowed preliminary public offerings (IPOs) and offers led via unique reason acquisition businesses (SPACs). Global investment banking's internet sales fell to $35.6 billion year to date, down by means of nearly 38% from $57.4 billion within the identical length a year in advance, facts from Dealogic showed. For 2021 as an entire internet sales for global investment banking become a record $132 billion, the statistics confirmed. IPOs are scarce, and SPACs are actually approximately non-existent, stated Stephen Bigger at Argus Research. The 2D region goes to be another dismal quarter for funding banking. Bigger said at the same time as banks will make some of it up on fairness and fixed earnings, foreign money and commodities (FICC) trading volume, which has been stronger than final year, typical the area is probably to be tons lower. Banks have talked in current weeks approximately the shine coming off investment banking or at least parts of it. Credit Suisse warned on Wednesday that tough marketplace conditions, low levels of capital markets issuance and widening in credit spreads have depressed the financial performance of its investment banking department. Credit Suisse, which warned of a second quarter loss, has its personal problems because it suffered from billions in losses in 2021 via failed investments, plus the impact of multiple criminal cases. Headwinds. This is the 12 months of Wall Street headwinds, Main Street tailwinds, stated Mike Mayo, senior banking analyst at Wells Fargo, NYSE, WFC. He said trading ought to growth year over year, however fairness underwriting is under strain. Having stated that, the European banks as a set, have lagged U.S. banks. This is a multi-year story that simply continues to tug on longer and longer. J.P. Morgan Chase & Company NYSE, JPM, said at its May Investor Day that it predicted funding banking revenues to be down in 2022, albeit after an exceedingly strong 2021. Meanwhile, Morgan Stanley NYSE, MS.'s Ted Pick stated at a latest convention in step with a transcript that inside investment banking, the brand new difficulty calendar become extraordinarily quiet, and the underwriting calendar turned into very slow, although the market's enterprise turned into doing quite well as customers have been hedging hazard. The picture is choppy across segments. While broader M&A volumes are decrease, normal activity has remained healthy and the pipeline for deals nonetheless appears surprisingly solid, in step with funding bankers. For 2022 profits for 5 of the largest U.S. funding banks, Goldman Sachs NYSE, GS, Morgan Stanley, J.P. Morgan, Citigroup NYSE, C, and Bank of America NYSE, BAC, Wall Street analysts anticipate a decline of 22.9%, according to records accumulated through Refinitiv, which suggests expectancies for a 27.4% decline for the second sector. U.S. banks record earnings in July. Earlier this month, the heads of U.S. banks warned about the fitness of the worldwide financial system, with J.P. Morgan CEO Jamie Dimon speaking of a coming typhoon. John Waldron, president and chief operating officer of Goldman Sachs, meanwhile stated at a convention in advance in June, "The confluence of the quantity of shocks to the machine, to me, is unheard of." While financial services recruiters say they are now not seeing hiring freezes, a few pointed to a significant slowdown in hiring tendencies from 2021's lofty levels. It isn't always as sturdy because it changed into last year this time.